The broadcast is now starting. All attendees are in listen-only mode.
Hello, everybody, and welcome today. We're going to be starting in just a moment, but I wanted to thank those of you who signed in early. So we're going to be talking about some topics that aren't used that often, but add a real punch and power. And if you need them, then they're just spectacular. So we're going to be talking about things that work with payables and receivables, and they work exactly the same in both. And I love it when you get to learn something in one area and you get to use all the knowledge you gained in another. So I think that's pretty awesome, as is the case most of the time with a lot of the payables and receivables transactions. So let's go ahead and get started, and welcome everybody. My name is Belinda Allen. I do want to let everybody know that this session is going to be recorded and available on the Angevity.com event site under the on-demand training. Today we're going to be talking about the hidden gems of scheduled payments and refund checks and vendor consolidations all at the same time. Before we begin, I do want to remind you that we are using GoToWebinar. So using the GoToWebinar pane, you can type in questions, you can type in chat. I also want to point out that a copy of today's slide deck is available in the handout area. So if you want to get it, just go ahead and use that pane and you could download it. It's a PDF, and I did put a lot of screenshots in there. So there are a lot of slides. We'll be skipping through some of them today, or just briefly covering them, so that we can spend most of our time in the demo. But at least you'll have screenshots so that you can follow along. So you might want to download that. And of course, it would not be an Angevity webinar if we didn't talk about our mission statement. And our mission statement at Angevity is to improve the life and success of our partners and customers by providing exceptional business application experiences that simplify, inform, and delight. And today is all about informing, and I hope to simplify a few topics that maybe you haven't wrapped your head around yet, leaving you delighted on what you could do with that. So let's talk about our agenda. First up, I'm just going to do a little bit of introduction on the topic. Then we're going to look at scheduled payments, customer vendor consolidations, and then we're going to talk about customer refund checks. Now, I tend to do Q&A at the end, but if you have a Q, go ahead and put it in the question area or the chat area. I will try my best to keep an eye on that so that we can get those answered as we go along. So I have no problem taking the topic questions as you have them, instead of waiting until the end. Now, I do want to launch one poll question. I just want to know what you guys, if any of you are using these, any of these modules yet so far. Oops. So I clicked on manage instead of lunch. There we go. If you guys could just answer the question, do you currently use, and you could select more than one, scheduled payments, customer vendor consolidations, or customer refund checks, just so I can get a little bit of feel on how we're doing. Okay. All right, cool. Well, a lot of you are using customer vendor consolidations. That's rocking. I love that. Okay, I'm going to go ahead and close the poll. And let's go back to, whoops. I think I lost my screen share. So let me, the poll is closed. Let me go back to sharing my screen. There we go. Whoop, I showed the wrong screen. So let me stop that. Wouldn't be a webinar if you didn't do something wrong, right? Okay, there we go. Now we're back to the right screen. Okay, very good. So we're going to be talking about these particular topics, and it's all about managing payables and receivables that you already have in your system. Sometimes we need to take a payment, or take an invoice, whether it's an invoice that we received or an invoice that we've given to one of our customers, and we need to handle it in payments instead of one big lump sum. And then if we do that, if we don't use the scheduled payment feature, then you're always having to manage with what is the due date, maybe changing the due date and dealing with it in that particular form. So this is where the scheduled payments is going to come into action. So let's just kind of dive into scheduled payments just a little bit. I'm going to skip this description and I'm going to get right into how the transactions work in the general ledger when you do this. And I think this is the easiest way to explain it. And we're going to start with payables. So if you look at the first area where we have the first section of account, let me see if I can get my pencil on here and draw. So, okay, so in this particular area, let's start by looking in right here. So you have an invoice in payables. We'll just start with payables. And we tell our vendor, hey, I have this $2,400 invoice. Can I pay it off in increments? And they say, yes, we will allow that. You could pay it off over the course of a year, but we're going to charge you interest. And I say, okay, that's perfectly fine with me. So what will happen when we do a scheduled payment is it's going to reduce our accounts payables for the full $2,400, and it's going to put it into an offset account. And once it's in the offset account, then we can control doing a number of transactions, and we don't have to manually enter them. The system will do it for us. So if we're going to do 12 transactions, all 12 transactions as we post them will look like this. It will increase payables, the full amount. In this case, if I'm going to divide it by 12, it'll be a $220 invoice, where we are reducing the principal amount by $200, and then we have an interest expense of $20. And I don't draw very well, obviously, with the mouse. So this is the way the transaction would end up looking. And then when we pay it, we're obviously just going to reduce payables the same amount, the $220, and then we'll reduce our cash, the $220. And this is how the transactions would end up looking. So it's pretty simple. Basically, what we're doing is we're just financing it. And we could do the exact same thing on the receivable side. So we would end up financing it. And we actually start this process by going straight to a scheduled payment. So I'm going to do this now. I'm going to just go right into the system. And let me pull that up. And I'm going to be using our public cloud version of GP called Power GP Online. It is a web-based version. However, I do want to point out that I'm only showing this to you because in the web-based version, you notice I can resize it much easier, and it'll be easier for me to make the screen nice and big for you. And I'll point out any kind of differences between the on-prem version, if that's what you're using, the regular web client, if that's what you're using, and our Power GP Online. So I'm going to start with a payables transaction. So I'm going to go into purchasing. Other than that, you notice it's much exactly the same thing. And when you do a scheduled payment, you're doing it for a transaction that's already entered and posted. So I'm going to start by looking at one of my vendors I have out here. So I'm going to start by looking at Bob's Auto. And whoop, should have just selected it right there. Okay. So I have Bob's Auto here. I thought I had stuff posted. So I have this invoice out here for $5,000. And I want to, let me make that a little bigger so you guys can see it a little better. And I want to take this $5,000, and I talked to Bob and I said, Bob, look, I need to pay this over a period of time. And Bob said, okay, but I'm going to charge you 2% interest on this. I'm like, okay, not a problem. And the fact that the distributions are set the way they're set, and this is one thing unique to our Power GP Online, is that you can see the account number. But I could see it's coded to AP, the full amount, $5,000, and I have it full amount expensed $5,000. And I'm perfectly cool with all that, and Bob is cool with that. So we're going to take this invoice ending in 58 for Bob's Auto for $5,000, and we're going to pay it over time. So under the transaction area here, if I were to scroll down to the payables area, there's actually an option for scheduled payment under transaction. And it opens up the scheduled payment window. Now there's no prior setup I have to do. I just have to have a transaction out there that's posted. And the schedule number will appear. That's just the unique number, like, a voucher number or so forth. And I might want to put a scheduled description, finance, over a year. Okay. And now it's asking me for the original document. So I'm going to do a lookup here, and I get a list of all of my outstanding documents. So I might want to sort and look at a particular area. Like I know this is Bob's Auto. So if I want to look up for Bob's Auto, there's Bob's Auto ones. And here happens to be the invoice that I want to disperse over a period of time. So I'm going to just highlight it and select it. And it'll populate that it's an invoice, what the invoice number is, and the vendor information. And I even have the scheduled document date. That's the date of that particular transaction, and the amount and the currency. So now I'm going to come over here, and I need to tell it what kind of interest that I want to calculate, simple or compound. And I'm just going to do simple interest here. And Bob said he would charge us 2%, so I'm going to put in 2% interest. And he said we could pay it over 12 periods, 12 months, 1 year. So I'll put in 12, and I'll leave month as my payment frequency. Now that I have that done, I'm going to come down and click on the calculate button, and now I can see my payment amount that I need to make each month. Then you'll have your first invoice date and the first due date, all located right here on the spot. And you could change those if you want. You do need to make sure that the first document date is always before the due date. I know that's a duh moment, but you'll get this message telling that to you otherwise. Now I can see the accounts payable that was used for that document. It populated automatically, but now I need to tell it what payables offset I want to use. And this is where the full amount is going to reside until I post these mini invoices. So what's going to happen is I'm going to get a full credit applied to that full 5,000 invoice. And then it's going to make 12 individual invoices for me. And it'll also make a scheduled one, so I could see when I'm looking at the inquiry that I have mini invoices out there. And I'll show you that in just a moment. So let me look for accrued. And you can see here we also have the Rockton Smart Fill here. So I'm going to select accrued purchases. And the interest expense, if I spell interest properly, I'm going to go ahead and get the interest expense right there. So I've populated the accounts that are going to be used. Now that I have my payment amount and everything's populated, I could click on amortization, and I could actually see the schedule of all the payments that will occur. And each payment, I could see the interest amount, and I could see the principal amount that remains. So I'll always be able to tell where I am by looking at this payment. And now I could just save this if I'm not ready to commit to doing this yet. If I do want to do a what if, what would my payment structure look like, and how much interest would I be paying, and so forth. But Bob said we could do it. I know we can't pay the 5,000 up front, so I'm going to go ahead and just click on post. Now let's go back and look at Bob's account. So I'm going to close that out, and I'm going to go back to transaction by vendor, and we're going to go to Bob's Auto. And now you can see this $5,000 invoice, the original invoice, is now historical, and it has been paid by, let's go, this credit memo that ends with 964. So if I come down here, here's the credit memo for 964. It's also historical, and it's in the amount of $5,000. And if I were to open this up and take a look at the distributions, you're going to see that it reduced our payables, that full $5,000, and it put it in accrued purchases, the full $5,000. Now, what it also did is it created this document called schedule. And this schedule neither increases or decreases the customer or the vendor balance. And in this case, I've decreased the vendor balance $5,000. But what I've done, I'm going to close this out, and I'm going to come over under routines to this post schedule payments. And now when I'm down here, I could see all of these individual transactions that were set up. There should be 12 of them for Bob. I might have a couple out there. Nope, I think that's right. 12 for Bob. And these are, if they all add up to the $5,000 plus the interest. So if I were to I'm going to take the first one and mark the first one and go ahead and click on post and then close that out. And I'm going to come back into my vendor inquiry. And and open that up. Now I have this payment amount out here that I've increased, that 425 payment. And let's take a look at that. And that's just an invoice. As you can see, it's just a flat out invoice. The description came over from my payment entry, so I could see that. And if I go into distributions, I can see that I'm reducing payable, the amount of the principal. I am expensing that interest expense for just this payment, and I'm reducing my accrued purchases by the principal amount. So I could see the full payment and so forth. So you could see it basically just handles financing for me. And if you want, you could go ahead and post all of those transactions so you could see, oh, I've got these 12 payments out in the future, and I could see when they're going to populate if I want, or I can control them one at a time. So it depends how you want to see it on your age trial balance. If on your trial balance you want to see everything out there because you're going to do these payments one at a time, then in that case, then you might want to post them all. Otherwise, if you just want to see, what's posted now, because you might want to pay extra principal. So let's do that now. This time I'm going to close that out, and I'm going to skip over to the sales side, and we're going to do the same thing on the sales side. So what I'm going to do in receivables, I'm going to choose scheduled payments. And once again, I have a Bob over here as well. So I'm going to do a lookup, and I'm going to find by customer ID, Bob's Auto, and I'll grab that first one. I believe that's it. Yep, $10,000. And this time I'll do compound interest, and I'll do it for 1%. And we're going to do this one over 24 months. And so let me go ahead and calculate that. So there's the payment amount. Let's put in the receivables offset. This time I'm going to do notes receivable. All right, well, we'll put it in current notes payable. And the interest income, I will just choose where I'm going to put the interest income. And as I look at this, you're going to see the interest will decline as I go down. So the more I pay in principal up front, the less interest I'll be paying. So I'm going to go ahead and just post this one. And now let me come in to my post schedule payments under routines. And I'm going to find, I just want to find Bob's. So I have another one out there. So let's do a lookup. Find Bob's Auto. Redisplay, there's Bob's Auto. And I'm just going to grab this first one and post it. So as I'm looking, I'm going to come in, and I think the payment amount, I'm trying to remember what the payment amount was. So let's receive on this. So the payment amount was $421. Let's say we're going to receive a payment for $450. Okay, so I'm going to come in and do a cash receipt. And the batch I'll use, I'll just call it batch. I'm not very creative. And let's save that. And let's find Bob's Auto. Okay. And now that I got Bob's Auto out there, we received a payment for $450. And I'm going to come in and apply it to that invoice. Go ahead and click on OK. And now it knows, hey, you applied this to one of your scheduled payments. So you have a balance left over. What do you want to do with the balance? Do you want to apply it to the principal? And if I say no, I can apply it to another invoice. But I'm going to go ahead and say yes, I want to apply it to it. And then it'll ask me, what is the schedule number? And just in case you have more than one schedule, that's the schedule I want, and that's the principal I'm going to apply. And then I'll go ahead and click on OK. And now I can finish posting this out. So I'm going to close that out. One thing I love about the web client, this is something you only get with the web client, is the search button. So now I'll just quickly pull up the sales series and post that cash receipts batch. So as you can see, we can handle advance payments on the premium as well. That works out really nicely. And let me go to transactions by customer and put in Bob's Auto. Okay. And as I scroll down, a couple things I want to point out. So first of all, I see the full amount, the full invoice there. I see the payment. I even see this advancement of the payment right there. And what I also see is I see my schedule, and I can see, so this is neither increasing or decreasing my amount, but I could see the amount that is remaining to post from that scheduled payment. So, and I point this out because the last thing I want to talk about on the scheduled payments before we move on is if you pull up a smart list of all your documents, you're going to end up getting scheduled payment information out there as well. And so depending on how you want to receive it or to view this, that's a good thing and it's a bad thing. So you want to be careful about that. So let's come in and do a search, and we'll say when the customer number begins with not between, but begins with Bob's Auto. Okay, so I'm going to go ahead and click OK. So now we just have the Bob's Auto one now. So one other thing I want to point out, just like you have to pay attention to voided documents, you also need to pay attention to the fact that the scheduled payment is going to appear on here. And the scheduled payments, maybe they are excluded from this one. They shouldn't be. Nope, I think this is it right here. Yep, this is it. They're going to appear in here too. So you want to pay attention to whether or not they're going to be on here. So you might want to come in and include, well, first of all, you should always include the current transaction amount. Let me just come in and put in a D. Come on. Well, we'll scroll. Oh, I was there already. Okay. So we always want to get the current transaction amount, but there's also something out here that should indicate whether or not this is a scheduled payment. So let me just add that one. And maybe it's not on this particular list that I pulled up. Or maybe we're not getting them all. So, all right, I'll just put that on here. But you want to pay attention to that the scheduled payment is going to appear out here in both payables and receivable. And there should be an option or a field for you to denote that that is a scheduled payment. So let's go back to our slide deck for just a moment. So again, here's what the window looks like for the scheduled payment entry. And we kind of did a few of these. This is a sample of the distribution report that would print, so you'd have access to that. And, oh, one other thing that I do want to point out is, let me come back to this window right here when you post. You can put in a due date on your scheduled payment, a cutoff date, and redisplay, so that if you have a lot of scheduled payments, you could just select the ones that are due at a particular time. So I do want to point that out. A couple other things to note. If you need to void a scheduled payment, you do have to make sure they're all posted and void them individually. That's a little bit of a nuisance, but that's just kind of the way you'd have to do it. So, and if you have a scheduled document out there that's not posted, just change the number of payments to 1 so you could post it and then void it that way. Just wanted to let you know that they are permanent fields out there. So that's something to pay attention to. And then on the receivable side, pretty much the same thing. As long as you can edit the due dates on payments for receivable, only if there's no interest applied to the payment schedule. So if you're not charging someone interest, but you are letting them pay it off on time, then you could change the due dates on that. So just wanted to point that out. I do also have the scheduled payment checklist in there, and then on receivables, pretty much the same windows are available. So I'm just going to toggle through those on the receivable one. And then let's go ahead and move on to our next topic, which is customer vendor consolidation. And it appears a lot of you are using this, and that makes me super delighted. So, and you'll notice that the screenshots are from the on-premise version, so that you can, if you're using that, you'll be able to see that as well. So what I'm going to do now is go back to my GP, And let's start dealing with this. So there is a setup you need to do for customer vendor consult. Oh, I have a question. Can you use this for rent payments? Talking about these scheduled payments. Yes, you probably could. If you have your whole the whole contract that you're keying in for, that would actually be a good one, because everyone, if you assuming that you're talking about people who rent from you, and then the comment that you're going to have people with different schedules or different contract dates, start date and end dates at different time periods. So that could be really beneficial, that you could just go through and key them in at one particular time. And the fact that the schedule payments are out there, you could still extract data from those fields, so you know, you kind of have like a balance of what is still accrued out there or uncollected from contracts, what hasn't been due yet. So that's still data you could report on, either using Excel, SQL Server Analysis Server, or Power BI. That could be really cool. And you could also use it on the payment side as well. So you have a contract, or any contract that you have. I know I have this contract for a year. I'm going to go ahead and enter it in. So it's part of my system, but I want to be able to pay it individually. And the big part about that is, in either payables or receivable, you don't have one giant invoice out there that is potentially due or not due. So that's kind of a big deal, being able to look at that, because if you think about the name, we don't call these payables accounts payables and accounts receivable. We call them payables management and receivables management. And the whole point is to enable us to manage these better, so that we can reduce the time it takes to collect, and we could also hang on to our cash as long as possible. So those are really important things. Cash flow is critical, and that's managing these can actually help that. So you could build some reports off of that. I think that's a great question. But yeah, if you're someone who rents to people, that would be really cool, because you could put in, especially if they're not on like the first of the month to whatever. If their rental period begins on March 28th, maybe today, for example, and it ends March 28th next year, then that would be a great way to do it, and you can kind of manage that. You do not have to put interest in, so you could just put the full amount and go ahead and put it in that way. So that would be kind of cool. And I suppose you could accept advance rent as well, just like I did with the advance payment. Very cool. Great question. All right, so let's talk about the customer vendor consolidation. Now, this one does have a setup window. So what we're talking about here is what happens if you have a vendor with a credit balance and you are going to collect from that vendor. They're going to send you a refund, or a refund payment, or you owe a vendor money and they want a refund check. How do you deal with that? So how do you manage that? How can you take a balance, a credit balance in either payables or receivables, and move it across to the other module? So if a customer owes you money, move it to payables, and if a vendor owes you money, move it to receivables. There are a lot of circumstances where a customer or a vendor might be both a customer and a vendor, and you need to move balances back and forth. And so this is a great thing for that. Now, in this particular case, like as I mentioned, there is a setup window, and the setup window resides under the administration section. So if you go to administration and setup, and then under company, there actually is an option for customer vendor setup. And in this particular scenario, you must populate a suspense account. Now, the suspense account is used very, very briefly. Data will tend to not sit in there. So what's going to happen is, let's say you have a customer that has a credit balance and you want to move it to their vendor record or a vendor record. What's going to happen is it'll move out of receivables into the suspense, and then out of the suspense into the payables. And so it's just used temporarily. So I tend to use some balance sheet account, either a receivables or a payables. I see things going more from receivables to payables. So either one, I could argue either side. So this is a call for your CPA, but I find other receivables to be appropriate. We also have some description prefixes. So it'll use balance transfer and something else as part of the description information for the balance. So as it moves the record, it's actually not going to move the record. So if you have a credit balance for a customer, it's going to enter in a debit balance and put in balance transfer, blah, blah, blah. And then in payables, it'll put in the opposite, and the description will be balance transfer, blah, blah, blah. And you can actually see the next document number listed right there. And I like to go ahead and have it create, if I'm having the system automatically create the vendors and customers for me, I like to go ahead and have it populate with the next vendor ID or with the default vendor class or default customer class. So I tend to populate, I just do a lookup list and it tells me which vendor classes I have available and which customer classes I have available. And then you have an option for what you want the vendor ID to be. So if I'm creating a customer ID or vendor ID from a customer ID, do I want them to end up being the same thing, or do I want to default to the next vendor ID? And I have the same thing for customer. And in this particular case, I like them to be this exact same. I find it to be a lot easier, and hopefully that'll be an option for you guys so that it'll actually flow into the next. So I have mine all set up, but you do need to set up this window. You do need to have an account number there, and you need to have your default information set up here. And I'm going to go ahead and click on OK. And that is all of the setup that is absolutely required here. So what we're going to do is we're going to start by looking at, let's go to the payable side first again. I'm going to go into payables, and I'm going to pull up my transaction by vendor. We're going to pick on Bob's Auto again. So I'm going to come in here and select Bob's Auto. And let's get rid of history this time. All right, so I have this credit memo for $25, and maybe I want to move that to something, to a different account, for example. I want to move it to Bob's Auto in my receivables. So what I'm going to do, I'm going to just close that out. And what you're going to want to do then is you are going to want to go to a window called Customer Vendor Setup. Now this happens to only be in receivables. So we're going to go back to the receivables section, or I could have used my search button. And under the transactions, we're going to choose Customer Vendor Transactions. And now I could say, who has the balance I want to transfer? Is it a customer or a vendor? And that was a vendor one. So I'm going to come into vendor, and I'm going to do a lookup on my vendor. So I'm going to choose Bob's Auto again. And it's telling me that no relationship exists yet. So I'm going to go ahead and click on Add. And when I do that, I can see my vendor for Bob's Auto. Now I need to find a matching customer for Bob's Auto. So I'll do a lookup, or I know it's exactly the same. I'm going to just type in Bob's Auto again, and I'm basically creating my own relationship. Now, if currencies are involved, you obviously need to put in a rate ID there as well if you're going to be dealing with different currencies. And now I've got those set up. I could go ahead and click OK. I've now established a relationship between those two, and I can see the vendor ID and the customer ID. And now when I come down here, because I chose it will come from vendors, I now am saying which ones do I want to transfer to receivables. And there's that $25 one. So I want to take that $25 and I want to transfer that to receivables. So I'll just mark that one. And if I click on preview, I could see it's going to create a debit memo in receivables for $25. And then it's going to do a miscellaneous charge for $25 in my payables, because essentially that would be money that I need to collect from Bob's Auto, the vendor. And so it's going to increase both of those. And when I post that now, it'll do both sides of the document. So let's start by looking at the payable side. So I'm going to go into payables, and we'll go back to Bob's Auto. Get rid of the history here. All right. Whoops, I shouldn't have got rid of history. Let's get rid of everything else. Okay, so now I have this miscellaneous transaction that was created. And when I pull this up, you can see it used that prefix for the description. And what is after it is actually the document number that I am moving over. So there's the description of Bob's Auto, and it moved over $25. And if I go into description, you can see that it is using my others receivables account, and then it is increasing my accounts payable. So it actually then also applied automatically to that credit memo that was out there, and that was the one that was reducing my payables. So it cleaned out both of those transactions. Let's go back to the vendor or the customer for Bob's transaction and take a look at exactly the same thing. So unmark those. There we go. Oop. Come on. Oh, it's open. Yeah, they haven't paid it yet. Okay, so here is the document as it came over. So I'm going to highlight that. And there is, oh, and actually I made a misstatement a while ago. What I put in the description was the AR number. And you'll notice here in this description is putting the AP number so that you could relate those two together. So this is a transfer that pulled up and it moved over. And if I look at the distribution, it is again taking it back out of that AR, of that other receivable stock amount. So it's actually moved it in and out with ease. And you could do a lot of these things. Now let's actually create a customer on the slide. Oh, before I do that, I want to talk about national accounts for a moment. If you have a national account set up, there is an option on when you go in and pull up the parent company under national accounts, this default parents vendor for children's refund checks. And what this is going to do is part of the customer vendor consolidation. I am jumping a little bit ahead of myself, but I want to cover this. In this particular example, what we have here is if I mark this on somebody, I don't know that I have anyone set up, but if I mark it, I'm actually creating a relationship. If I create a relationship with the parent customer and a vendor, I'm also creating that exact same relationship with all the children of that parent. So I only have to do it one time for the national account and it will handle both sides of that. So that's a pretty cool thing. All right, so I want to kind of jump ahead a little bit, and what we're going to do is we're going to actually let me go back to my slide deck for a moment. Oh, I did talk about that at the right time. Okay, cool. Yay me. All right, so we're gonna do, you can see we did the consolidation right here. And before I do that, let me go back and let me do it the other way this time. So I'm gonna come back in and under transactions again, I'm gonna choose, I am in the right spot. There it is, customer vendor. This time I'll choose customer. And if I go, I'm gonna just do Bob's Auto again. Forgive me for using and abusing him. There we go. And the relationship was already set up this time. This time I'm transferring it to payables. So if I were to look down here, I have a $50 credit. Maybe I don't want to transfer all of that. Maybe I just want to transfer $20 to payables and I still have $30 left. So I'm doing a partial transfer. Now, because this is like applying a payment in a way, you can open it up, take terms, discounts right here on the spot if you want to. I'm not going to do that now. I'm just going to keep it simple with the $20. And now I can once again preview. So I could do it both directions from this exact same window. There's the preview. It's going to put it in payables. And then I could go ahead and click on post. And there is no putting this in batches. These are transactions are done live one at a time. So I think that's pretty cool. Okay, so let's take a look at the refund checks. So you have a customer has a balance and they want a refund. How do you do this? So we're going to take that and then we're just going to run it right through. In one step, we're going to say, okay, I could take it and do the transfer like I did and then pay it, but that's a lot of extra steps. When you know you have the credit balance in receivables and you know you just want to write a check, you could take that balance and immediately send it to a payables check run. And I got the screenshots here on how to do that, but let's just do it live. All right, so we know that there's still $30 left on that refund, and Bob said, will you send me the refund check for that? So we're going to deal with that. So under sales transactions, there is an option here for refund checks. And the first thing we need to do is create a check batch, right? So because we're going to automatically send this to a check run. So I'm going to create a check batch, and this check batch, we'll just call it checks. Being very creative. When I click on add, you notice I started from receivables, but it pulls up the payables batch entry window that enables me to select which payment method I want, which checkbook I want to use, and what the posting dates and check dates are. So it takes me right to payables. So now that I've got that set up, I can choose how to select my documents that I want to pay. I could choose them one at a time, or I could say, let's take a look at all the credit balances. Now, I don't know, there's a minimum there for the refund. I don't know which ones that I have out there that have credit balances. So I'm going to just go in and select all of my customers. And when I do this, I'm going to click on insert. And basically, I'm telling it any customer out there that has any credit documents, populate them in here and let me know about the individual credit documents. And as you can see, one of my customers is on hold. Do I want to include that one? I'm going to say no. Any customer on hold, I certainly don't want to issue a refund for. And I happen to have two out here. Oh, I don't know why Bob didn't pull up. I should go and look for Bob. So I have these two documents out here. So I have, actually, let's get Bob out here too. So now that I've got that pulled up, let's do a specific for Bob. Oh, yes, I know. All right, so I'm pulling up Bob particularly. Oh, there's that one. Because I partially applied it. I partially moved some of it over. That's why I can't use that one. So, okay, that's cool. So these two down here, if I want to refund that 30, I would have to move the rest of the 30 over and then pay it in 2 steps because it was partially applied. In this particular case, I have these two documents, so I could decide which one I want to pay. And when you have, or if I want to do both of them. So I have both of them out here, and notice neither one have a vendor. And when I click on one, it puts this little dot here. So that's the one I have my focus on. And maybe I don't want to pay this $1,500. So I'm going to remove that one. And I'm only going to do a refund check for the $94. Now I don't have a vendor out here, so I need to create a vendor for it. So I'm going to go ahead and click on create vendor. And then I'll click OK. And it's going to go through the process of creating the vendor for me. I didn't select the customer first. There you go. Create vendor. And because I told it to use the same ID as the customer, it pulled in all the exact same information, the customer number for the vendor name, and then it populated with all of the address, and it put it in my vendor class for me. So I'm going to go ahead and click on OK for all of that. And so now I have my vendor set up. Yep. So I have my relationship all established, and I have the two of them together. And so now that this is done, I'm going to go ahead and click on process. And as soon as I do this, it asks me, do I want to transfer the balance? And I'm going to say yes. I'm just going to cancel the posting reports because it's doing the same adjustment in receivables and then putting a document in payables. Then it immediately takes me to the print payment window where I can now print the payment or process the payment, whatever I need to do. And in this particular case, we'll just print it to the screen. And I'm going to go ahead and process it. And here's the check behind it, you could see, for $94.06. So we'll close that out. And the payment is processing. So here is my payment amount. Whoops. Got a little carried away. Zoom in there. All right, so here's the payment amount, and you can see it's for $94.06. So I was able to go through and process the payment from within receivable. So I didn't do the transfer in multiple steps. I did the transfer in one big swoop. So what actually happens here, if you look for one, where the number one is, you can see I'm telling it I want to get in this screen example, I'm getting a specific document. I will put in the vendor for whom I want, the customer for whom I want to get that document, and then insert it, and then I'll see the document amount there. And then once I do that, then I could even go in and edit the refund check. So if there's multiple, in this particular case, I should have shown you this, sorry, I did not. If you do one customer and they have a lot of balance, you could go through and edit it and do it specifically. So it would actually do one refund check per customer, but you could go through and choose specifically which transaction you wanted to create if a customer has multiple transactions. Clear as mud, right? Okay, and so here I am creating the vendor once again. And then you can see it's prompting me, am I sure I want to do that? And then I'm printing my checks. And then what actually happens is you'll see in the receivable side, it will enter in a return for the, actually it'll enter in a debit memo like you see up here, the 1005 for the amount, which will clear, and it'll apply it. So it will clear the balance for the customer. You will need to do the paid transaction removal to move it to history, but you started with that credit of 731, it entered the debit of 731 as well. And then on the receivable side, it enters in a miscellaneous transaction, numbered refund something or another for 731, and then you'll see the payment, and that's applied as well. So we kind of went through that a little bit fast, but we have, I do have time for questions. Meanwhile, while you guys are posing questions, I'm going to launch another poll because I'm curious. This is not something that gets used a lot. So I'm curious if you found something in here useful for you today. So if you could just kind of like populate the question. Oh, good. Yeah, these are things that are really not used very much, and they're incredibly powerful. So it's just a really nice, I don't know, it saves a lot of time, and the fact that all of the fields reference each other, you can actually have a really good audit trail and tell exactly what ended up happening. So thank you guys for that. So wonderful. I'm glad that I did this today. We do have a couple of more webinars coming up. They're not on our event site yet, but they will be coming up soon. And so look for these out there in the next day or two. The two we have coming up next month for April, I'm going to be doing one on the 18th. I'm going to use Microsoft Forms. This is not a GP one. And Microsoft Flow. You could use one or the other. And I'm going to show you how to make forms or quizzes for your teammates or for other people in your organization. And then using Microsoft Flow, you could assign tasks to them to do things. So that one is really cool. I have an example I use a lot. I'm trying to get away without using business cards by using this particular process. So you might find that a little bit interesting. And then we have a GP specific one on manufacturing versus bill of material assembly. So that should be a very interesting one as well. So keep your eye open for that. If there is a particular topic that you want to see, I am begging you to put it into the webinar chat or to send us an email. We'd love to hear exactly what you want to see. So here's your opportunity to ask for free training. So go ahead and let us know about that. I'm super excited about that. Other than that, does anyone else have any other questions before we wrap up? No. Looks like I'm going to be giving you a few minutes back today. So do not see any other questions. But I really appreciate your attendance today, especially for those of you who this falls over your lunch hour. So I really appreciate that. And I do not see any further questions. So I hope you had as much fun today watching this as I did showing it. I think these are really powerful features. I encourage you to take a look at them. Remember, the only one that required setup was the customer vendor consolidation. And that's just because the system needs to know what common account to use just to funnel money from AP to AR, because it has to do a document in each one, so it can't automatically code to the other account. And then you want to make sure you have those defaults set up, like what's the next number. And those will be set up out of the box, so you don't even have to worry about that. Other than that, I appreciate your time today, and I hope everyone has a wonderful rest of the week. And I hope it is already turning spring where you are. It is where I am. Thanks. Bye.